Hello everyone. Today we're going to do our first little overview of how to start off with technical analysis. And I wanted to share a few things with you and how in terms of how you can look into different charts, different stocks, and it's always good to have do a little bit of a homework before the market starts, so that way you know exactly which tickers you're going to be focusing on and you have drawn some entry points and your exit points before the market starts, and that way you can easily enter and identify the right opportunities when they do arise, and you can stay profitable. Let's start off with the ticker level. We're gonna start off with our ticker that we did a few days ago. It was a swing trade, Alibaba. All right, so with Alibaba, the stock has been the stock has been going through a lot for past year or so. I mean, you can see from the highs of 317 all the way down to the lows of $73. Um, yeah, a lot is going on in terms of with all these Chinese stocks and especially the tech sector in China due to their government policies and stuff. Anyways, so I've been following this stock for quite some time. I'm not a big fan of Chinese stocks just because of the uncertainty most of the time. It is a great company though, but it's just that it's not that great in terms when it comes to the consistency you can see throughout. Anyway, so let's get to the business. So I've been watching this I've been watching Alibaba for quite some time, and as I was saying on our group chat the other day, that I love to short it. Anytime there's a pop, you can see right here, there's a pop, and then it'll go down, then a little small dead cat bounce again, then it'll go down. Here we go again. Then I mean you can just see it's just going down, and then there was a little chop right here, and then boom. Anyway, so with this recent trade that we did, the most recent trade that we did, um, I'll show you that how let's get out of this first. Okay, so here we go. This is the most recent trade I did. I set a trend line right here. It's not a trend line. I set a little horizontal support and resistance line right here. And I'll tell you why that $110-ish line that I set up here. And that was the Q. So the first day it did break down, second day it broke down, and after that it did a little retest. So upon the retest, I wanted to see that how successful that retest is going to be. I'm going to zoom in a little bit so you can see that how successful retest it is going to be, and so you can see a small wick that moved up. It touched this line, it got rejected, and this is the point around. Actually, we got in around right here, so around 109-ish, 110, between like 109.70s. That's when I entered. So that we entered in Alibaba puts for this one right here. This was last week, and we entered in this puts right here. And after that, the my exit that I had set was around this line of 97.50, around 97.50 to $98, and we got out right over here. Now, let me tell you a little my logic behind that and why I entered over here, not here, and why I exit here and not waited for it to go all the way down there, and how I came up with these lines. So you always want to look and see, remove all the moving averages and everything from your screen. Have a clean screen. These lines I drew right here, I'll tell you what these are and how you can also use them in your everyday trading. Okay, so let's go back a little, and you can see these lines will stay on our chart, and it'll tell us why. It's always good to see the support and resistance of all the stocks, and you always want to go back, especially in times like today, where the bear market is, where you cannot really call a top or a bottom. anywhere. So you always want to go back and see what is going to be the next resistance and what is going to be the next time the stock is going to have a little bit of a bounce before it can possibly go further down. So given that, so you can see this 110 and this 97 line that I have selected, it goes back all the way here where, uh, and I'm talking about this is in December of 2014 when the stock was starting to trade. So you can see that this area was a little confluence area where when it did break down of this $97 line, it kind of came back down a lot. And then when it did move, when it did try to move up the $110 level, it got rejected pretty fast and it came back down. And then from January of 2015 all the way till September of 2016, it stayed below this line and it acted as a support. After that, it came back up for a little while and then same thing, it got dropped. It back tested this level right here and it got picked up from there. And then after that, we saw quite a beautiful run all the way up to 319, 300 some dollars. So anyway, so this was the reason where I saw that this line, $110 level, and again, these levels are still out there. They're still set. We will use it again. I will definitely use it again next time it's crossing it above or below. So these lines are going to be there for quite a long time. You can see I entered in this trade right here based on the data from 2014 and where these lines and these levels were acting. And in the end, this trade ended up giving us 145% return, which is pretty impressive. I mean, obviously, then after this Alibaba, I'm going to come to Moderna, where if you guys have been following my chat, you'll see that I was pretty disappointed. It was still a green trade. It was a 67% gain trade, but I did not follow my own rule, and that was the reason why I was upset. And I'll tell you about that also. But anyways, let's talk about this. This trade made me feel good um, after losing out on potential profits on Moderna. All right, so this was the reason. So this is at $110. So you always want to go back and see where there's kind of like a line in the sand where every time if that breaks, then it will kind of like go down. So right now, for further puts, our line in the sand would be this $97. Let me go ahead and zoom in so you can see it'll be this $97 because you can see that every time it did cross it, it did go down um, quite a lot. So to this $110 level, you can see it was in the recent time too in December of last year. You can see it was bounced from this level. It bounced off of $110 level three times, and then finally when it did break down, it went down a lot. It went down all the way to $73. Finally came back up, and then boom again. So this level of 100 and this so I'm sorry, this it came back up again right here, and then again it tried to have a little bit of a resistance, and then finally there has to be a gap down. So the bears had to do a gap down in order to come break this level again. So this $110 level is a great level to see whenever it is coming down. Now there are other levels too. That's why these are the dotted lines that I have up there, which is a $120 level and $115 level. This is a great way to enter if you want to go a little aggressive and go in a little bit before time. It's still pretty good. I mean, if I had entered at this level and waited it out all the way here, that would have been a 800% trade, which is a great strategy. But I don't want to swing anything for longer than a couple of days. So that was the reason why I waited. And I did not, I honestly, I didn't expect this line to break down overnight. That's this much. And that was another reason. So when it did came back here, then I was like, you know what, might as well, is it going to go up or is it going to go down? Might as well wait till $110 level, and I'll just play off the level that I'm comfortable with. Um, Ended up with 145% return. So what needs to be learned from this is that um, support and trend lines are very important. Support and trend lines can give you some awesome trades. um, um, Support lines and resistance lines can give you some pretty awesome trades. Trend lines are something that we will talk about in our next video. That's another way to um, measure if the stock has broken out of a downtrend or bull trend or bear trend. That's another thing. So what I meant over here is that support and resistance lines are great way to enter, whether it's a day trade, whether it's a swing trade, uh, but it's a great way to capitalize on some great trades. And you can set it up. I mean, you can literally set it up with any stock that there is out there. There's a support and resistance for all of them. So this is a thing. I exited out that Alibaba with 140, I think 140%, 145% returns right over here. If we do open a market again on Monday and we see that it's breaking down this level, I would be little. I mean, it did bounce back, and this is a pretty big wick showing that bulls did not want anything to do with the level being below this. So they did bought back most of those losses, and they did close up toward the higher of the day, not toward the low of the day. So that is sort of a midterm bullish. I do expect for it to go back and test this resistance right here, just like it did back here, and it might have to come back down, get some more momentum, catch up some on some more momentum, move up. But yeah, but for now, I'm gonna leave Alibaba alone. I'm not gonna be trading it, and I'll watch the price action to see where exactly it wants to go. Does it want to break down? The least path of resistance is actually on the way up as of right now after this big drop. So it is. I don't believe in the word oversold in the current market situation, but there is. It could be a little bit oversold right here on it. So that's why I would wait for it to go back up. Um, One of our members, Farid, he actually got a call butterfly on this, which I think was a great idea to get it off of this point right here. I think it closed. Alibaba closed at I think 110 bucks, I believe. Oh, I'm sorry, $102 or something, I believe. So it already moved up a few bucks from the last point. So, anyways, so this is how you can use the support and resistance lines. Um, by the way, guys, you guys can use this software. I have the premium version, but even if there's a free version available, it's called TradingView. I'll share the link in the. I mean, you can go to tradingview.com and you can set up an account. You can do it on your mobile devices or on a desktop. Um, it's a great software. It is the best charting software that's out there, especially for if you're trying to learn to do the technical analysis and all that. I'll use this ticker, Alibaba, um, or to also tell you that anytime you're looking at a ticker like this, and there are right now, especially with this during this bear market, there are a lot of tickers like this, and all these small gaps that you see, these are the gap ups and gap downs. So a lot of gaps on this right here. That this kind of shows a little bit of the weakness also. That how when it was dropping, it just, I mean, it kept coming down, and most of those major drops was due to the gap downs, which so for it to be going back up, it needs to cross this $139 level for first of all to kind of do um, to kind of get the bulls back in the game and move up from there. So in terms of finding out whether we're in a bull trend or we're in a bear trend, easiest way is to look at a chart and look at it and see the reason why I'm choosing this chart because we had a bull trend first. So you could see how to identify a bull trend. For a bull trend, we need to see higher highs. It means the stock needs to be keep on touching higher prices on a certain on a daily time frame and lower lows. So they need to be high, I mean, sorry, higher lows. So higher lows means we cannot be going up and the same amount going down. So we need to be going more up, which is very simple and logical that it needs to be taking, if it's taking 3 steps ahead, it only needs to take 1 step back. If it's taken 3 steps ahead and it's taken 3 steps back, then that's just a chop. So we're not, it's not getting us anywhere. We need to go up, just like you can see that it moved up here. Um, the first high, if I take it from this 2017 level, it needs to go up this first high, and then the drop was still above this level, and then it made another higher, and then this right here came down. But this level right here on a bigger time frame was just a retest of this this gap up that we did right here. So you can see it was a retest. It did not break down that level. And then you can see we started having this rally of higher ups and highers down, and you can see, I'll show you. So from here you can see it was just going, and this is what if you must have heard that it says bulls take stairs up and the bears just take elevator down. So th that's the easiest way to look at the bull trend. I'll get into the technical part of it in a bit to tell you how you can set up some moving averages, how you can set up some EMAs and SMAs to get familiarized with them and all that stuff. I won't get into the definitions of them that much because that honestly is very irrelevant. But what is relevant is that you can look and see what um what kind of trend the stock is making, and you can kind of project some prices on your own. Okay, so let's look at my other chart, Moderna. Ah, here we go. I was pretty disappointed on this one right here, and I was disappointed on myself for not following the the simple rule that I'm telling you guys, and and I mean FOMO gets to us all, guys. So, and this was a mistake I learned from. And after this one, I did the Baba trade, but anyway, so all right, so let's see this Moderna. It's the same thing. These are the trigger lines. And on this one right here, I did enter on the trigger line because I know every time it drops pretty quickly. Every time it has crossed this, it has crossed it pretty quickly. So I know it was a trade that wasn't gonna last more than, I mean, that wasn't gonna be more than a few days, and I should see the results. You can see back here also that this level has been pretty um, this level has been pretty important, and if I'm looking at it on a bigger time frame, this is looking like a huge head and shoulder. Obviously, that's not uh, that it's not. I mean, head and shoulders are relevant on a larger time frame, but this is a daily time frame. It's if it were to go down, it's just not doesn't make sense from the highs of 497 to the obviously cannot be below $0, right? So it has already done its run. It has back tested a lot there. Though I still believe that we have room to see around $100 eventually, maybe in September when that big drop is expected. So between 180 to $100, I believe that in we might see it this year. Uh, but all right, so see that's the problem with me. I digress a lot. So okay, so why I entered Moderna put that ended up being I don't know like 400% return, $450 per spread, and why I entered spread. All right, so this was the line, which was like I said, it was a trigger line. I explained to you last time how it has acted as a resistance before, and every time it failed to break it, it came back down significantly. So there was always I mean, I'll look at the last two drops, and I'll tell you that when it tried to backtest it here, it was around $177 down to $122. That's a $50 drop right here. There's another $180-ish drop to $120 drop. There you go. That's another 60 bucks. So I'm expecting the same thing. I was expecting the same thing from here, and I still am. Obviously, none of this drop happens overnight, so there's always nothing goes down or nothing goes up in a straight line in the market. So there's always a little bit of a wavy pattern. So anyways, I entered this right here at this price level, and I believe I did enter it when it was around 177-ish or something like that, around that. So this is the day I entered it. After that, it went right as planned. And as you can see, I did a spread on that. I did a butterfly spread on that. So it was at $170, $160, and $150. And that was the reason why I entered 160 to be because I did not want to swing trade it for a long time, and it was only a 1 week ahead of our expiry. So I took the first support level, which was you can see was at 160 bucks, so you can see right here, 160 and some change. And why? How I identified it? You can see. Let's forget about this because this part didn't happen when I was looking at it. So I looked at it that right here there was a little bit of a consolidation with the support of 155-ish and the resistance of 160. It was 3 days consolidation, actually 1, 2, 3, 4, 5, 6. There was a few days of consolidation which I finally broke out of. Second thing was right here again. There was this the 160 level acted as a support and resistance, both right here. Same thing right here. So that's what led me to believe that this is the level where it's gonna be that this will be the level. And now if I go back to 2021, again you can see this level right here. This was it was kind of like making a resistance. It was getting rejecting from here. It bounced from here, and once it back tested it again, it bounced, and then boom, this is the run started. Same thing over here. So these are the things that I look at. um, it might sound a little complicated. It is not, but it might sound, if you're a newbie to technicals, it might sound a little complicated. It might sound, but it's very easy. It is time consuming. That's why I say that to do a little bit of a homework. I do that every night. Sometimes I do that maybe 3 times a week, where I select out 5, 10, 15 different stocks, and I just do a little run on them. Wherever I see that they are closer to our price targets or closer to our targeted entries, I keep them on my watch list. And out of 10 or 15 stocks, at least 3 or 4 of them hits every week. That's more than enough to give us good trades. So this was the reason why I entered here. I got FOMO'd right around here when it um, so I sold at around 167, and if I had held on to it till 160, that would have been the trade of the year for me. But I had pretty big position on it too, so that would have been just a pretty nice trade. But I sold right here. Why I sold right here? Because this level of 166 had held before over here, and that's I mean, and again, this was just a back test, and this was a complete blunder, and blunder happens with me, with you, with everybody. So this was a complete blunder on my part, and that's why if you are following me on that group chat, you would have seen that why I was so upset, and now you know why I was so upset on that level of for selling earlier. Okay, so this was a little my first time, um, kind of like a little blog that a journal that I was doing with right here. I was kind of repeating of what I've done, looking at my strategy. This helps me to kind of go over my previous trades, and I'll be recording this session also. So this will be helping me also to go back and listen to what I've done. We'll look at some of the trades that I've done, and my hope is that you guys can learn something from it. So this was a little lesson on support and resistance lines and how to draw the support. This is the most basic technical analysis you can start off with. There's nothing you have to do. You don't have to worry about any lines going down. You don't have to worry about showing any, looking at any EMAs or SMAs or moving averages. You don't have to worry about Bollinger Bands. There's a lot of stuff out there, so it's not hard. But it's very complicated, and I'll give you example. So let's see. We got three moving averages, so we added some of those. Looking for the Bollinger Bands. Okay. Okay. So this is how the technical chart would look like if you add all these different indicators in it. Um, every indicator is different. If I go over that, it'll be a very long. I believe it is already a very long video by now. Probably half of you are already shut it off by now. Um, but this is the this these are this is how the chart would look like if I tell you at uh, 5 EMA, 13 EMA, 50 EMA, 20 SMA, 50 SMA, 500 SMA, and 100 SMA. So if I give you all these these numbers and these abbreviations, first of all, I'll confuse you. Second of all, after you see this is a very busy looking chart. Not ideal for someone new who's trying to learn um, the technical analysis. And I've always been I mean, before I was always a fundamental trader. I was never a technical trader. So I used to look at companies' book, and I was a stock trader. So I used to look at companies' books and their financials, and based on that, I would do 6 months to a year swing trades, and that's how I used to do the trading before. But for past 3 4 years I started came coming into the technical side, and at first this was all gibberish to me. And but again, just give yourself few months, and you'll I mean every line will speak to you just like it. I mean it'll tell you a story. Every candlestick tells you a story. So this is how you can learn eventually. But if I were to start off with this, with all these little lines going all over the place, it will just confuse you, and I know that I've been there. So the best thing you can do right now is look at the support and resistance lines, the ones I showed you before, and we go with that. That will be that would be really good way to start off with learning to do technical analysis, or do at least some basic analysis on what you can do. It'll keep everything looking clean. You know the lines that you drew, so you know exactly what these lines mean. You would know that on your own chart. And again, use TradingView for and just go to tradingview.com, and you'll see it's a free. You can get the free version of the thing. So, all right, guys, definitely give me a feedback. Tell me how I can improve this. If it helped, if it didn't help, was it? I mean, tell me if there's anything else I can do for y'all. Let me know. I'm trying to give back to the community, but at the same time, I'm also trying to. The reason why I finished that paid group was because uh, it made me feel like there's a lot of people are relying on me, and some people just don't know the risk management, so they kind of put way too much that they can afford to lose, And after that, I saw some screenshots of people, and they've lost some significant amounts. And if they're telling me that this was their life savings, that kind of, I don't want, that's pretty heavy stuff. So I don't want any of that. Um, if somebody cannot understand the risk management, they should not be in the market. Um, so you need to learn when to get out. I've shared that the little rule list that I made. So always set a stop loss on every trade, no matter if I'm saying it. Look, it does not matter what I think or what I say or what anyone thinks or say about the stock market. It doesn't matter. In the end, the only thing that matters is the price action. So only thing we can look at is the price action. That's all that matters. I can only share my opinions. Anyone that you listen to, anyone that you see online, anywhere, um, we can only look at it and kind of the tell you that what is the most probable thing that's going to happen based on mathematical calculations, which are these charts and the prices. But so that's why people call themselves day traders and swing traders. um, Become a quantitative trader. So learn to work with the probabilities that of what's the best probability. You cannot predict the market. No one can. But what you can do, you can look at the most probable thing that's going to happen, and then you can see. So I'll give you this. So if the most probable thing will be that somebody looks at this right here, at this level right here, and they say, you know what, it was rejected last time. It was rejected last time from here, and it's going back here. And last time it rejected, it came back down here, and it made some momentum, went up there. So this time, it can reject again because that's what happened last time. And this was a pretty big, heavy red candle that we saw here, right? So this would trigger someone to short a stock at this point, and based on their targets and stuff, then you can go down. So this is the probability that the stock is going to go down. So this is the game of probability, where you can see and you can learn based on the previous things, and um, never be greedy. Every time I've tried to be greedy, I've actually ended up. I've seen some of my. Sometime I've seen. I don't want to disclose the number, but I've seen a pretty great green trade go into a red trade just because I wanted to go in for an extra push for extra 5% or extra 15% profit on top of that. So never let your green trade go red. Always take profit. That's why I always try to take at least 50% of my profits, at least 15% of the 50% of the position, and my runners are not more than 25% or not more than 10% of my entire position. So these are some of the things that we'll be covering. I may have digressed a lot today, so I may have been going all over the place. Again, this was the first time of me doing it. Let me know what you guys think, if it helped at all. And I see there's a lot of guys who don't like to speak up on the group. Maybe you're shy, maybe you think you don't want to ask a question, then sound or may make yourself sound a little naive. So it is okay. It is completely okay. So on the group, I want to give a shout out to the people who do speak up and do help out. I'll start off with Mo, Amir, Farid Bhai. I know we have a newcomer, Sohail Bhai. I remember he was learning a lot, and now he's starting to share a lot of stuff on it too. So a lot of people that are out there. I hope I'm not missing anyone, but I know Mo, Amir, and Farid Bhai, both all three of them, they are always very talkative. They're willing to share the trades. They're telling people that this is why I'm entering, this is why I'm exiting, um, all those things, and I appreciate that. I appreciate that. Again, uh, my whole thing is that you want to learn about this process. You want to go on with this process, and if you want, you can help somebody else learn this whole process. It's better to teach someone to fish versus feed them. So if they can learn to fish for themselves, to use these charts and use these strategies for themselves, that's the best thing you can do for somebody. That's my belief, and I guess this is it. I'm gonna upload this now. Let me know how did you guys like it, and please do give me feedback. Thank you. Take care. Bye.